Report on our radar now is Kellton Tech, a stock first highlighted by my colleague Nigel in his weekly segment Mid-Cap Mania. Now, Kellton Tech is a small company with a market cap of 250 crores, but the stock has seen a mind-boggling 800% rally since July last year. Niranjan Chintam, founder and chairman of Kellton Tech, now joins in. Hi, Mr. Chintam. Thanks very much for speaking with us, sir. Promoters have been, continuously hiking stake as of March 2015. Their stake stood at just under 63%. We now understand that there has been a preferential allotment as well to promoters of about 25 lakh warrants. Can you tell us, A, the rationale behind this, and B, what, whether if converted, what it will take the promoter stake to?
Let me tell you the rationale behind it. We are in a process of acquiring companies. One of them we already announced to BSE that we'll be closing by end of the month. For that, there is a equity part that we're taking, which is why we decided to take warrants at the price of 90 rupees, and even though the stock is trading at 74, because we believe that our stock is underpriced, and we as promoters would like to signal to the market saying that this is something that we believe in, and yes, we are here for the long term, and we are continuing to look out for acquisitions as well as increase our stake wherever it's possible, so that we are showing that we have confidence in our own own work styles and what it is that we want to do.
Hi Niranjan, with respect to this acquisition, it's the US-based IT company with a revenue of $40 million that should close in 1 month.
We are going to be closing by end of this month.
Oh, by the end of May itself.
So this is an end of May itself. Yeah, we're just waiting for the financial closure before we close it. Okay. So that's the reason why we told the BSE that we are in the final stages of acquiring this company.
Sure.
Once we have the financial closure, we'll be able to disclose fully of what the company is and the rest of the transactional details.
Okay. Roughly how much will you be paying for this acquisition, and walk us through the balance sheet strength of the company?
Our balance sheet, or talking about the acquisition balance sheet?
Both. If you could tell us how much you need to pay for this company, as well as the strength of your balance sheet.
Sure. It's about $14 million is what we're paying for this company. This is over a period of 3 years. There will be an upfront payment, and as well as earnouts, we call it, that is paid over a period of 3 years. So the balance sheet of the company, like we told you, the top line is about $40 million for the acquired company, and the EBITDA is about $3.2 million.
We also understand that over FY16, that you plan to achieve a target of about $100 million in terms of your revenues. Can you tell us what's the plan to actually get there?
Sure. In FY16, we probably be around $80 million. What we told in the press releases was that we'll be at $100 million probably by August, September of next year. So our strategy is to grow both organically as well as inorganically. We have a few contracts that we would be getting shortly, both from the private companies as well as Indian central government companies. So hence, our both India-based revenues as well as the US-based revenues would go up. That is, I'm talking organically. When it comes to acquisitions, we are looking for other companies to acquire. We are in discussions with a few. That usually takes us about 6 months before we close any company.
Okay. In your management vision, you also have plans to raise about $25 million. Now, part of it will come through from this preferential allotment that you're doing. How are you planning to raise the rest of it, and by when? Sure.
So some of it is going to be debt, the 60-40 ratio that we said. So the equity part, probably another 6 months down, we would like to do some QIP. I think we'll be ready by then. Until then, the promoters will be funding, and that's hence the reason why we went with the preferential route for the promoters at this time. So maybe 6 months, I'm thinking about October, November timeframe, we will be ready for a QIP.
Okay. And North America is a major contributor to your revenue. I think it's contributing nearly half, if not more. Are there any sort of headwinds that you're seeing, and is there any sort of increased focus on, say, the European markets or even India for that matter?
So India is going to be a significant contributor the next year. You are correct, the majority of the revenue is coming from North America. North America, as you've probably been hearing, there's a lot of momentum in the job market there. So companies are opening up their purses to start spending on IT again. So we believe that, we are in the right spot there. Hence the reason why, we're targeting. And also, my brother and I, we lived and worked there in the U.S. for 19 years. So we understand the U.S. markets very well. So we are comfortable with that market. Coming to the European markets, because of the euro crisis that's going on, we don't want to be there yet. Hopefully in the next 1 year, euro would stabilize. That's when we want to go after the European markets.
Okay. In your target to reach $100 million by August, September next year, do you need to do more acquisitions or will you hit it, organically?
So we probably would think that we might need 1 or 2 acquisitions. This will be a smaller acquisitions. The acquisitions, the way we do is, either we acquire the customers or we acquire technology. What I mean by that is, if we want to go after a certain industry vertical, the best way that we believe is to get into that industry vertical is to acquire customers instead of competing with everybody there. It's easy for us to get there. The other strategy that we have is to acquire technology. We are focused on WSMAC, we call it, the web, social, mobile, analytic, and cloud. So we acquire companies that would give us that bench strength or a deeper capability there. So that's how we go after companies.
I understand that you're in the growth phase right now. You might be also taking on some debt. Could you tell us what the figure actually stands at? I mean, I'm just seeing your finance costs. They've been creeping up a bit, so they're now over that 1.5 crore mark. So can you tell us what your debt is and whether there are any plans to bring it down?
Yes, there are plans to bring it down. The debt is probably about close to $8 million. Of that, $5 million is working capital. Working capital is a combination of cash that is required to run operations as well as the BGs and the LCs that are required, specifically when it comes to the contracts that we go after in India. Whereas the central government contracts, we do need to provide some bank guarantees. And LCs, as you know, we need to acquire some equipment, we provide LCs so that we can stretch the money.
Okay, with respect to this upcoming acquisition that you plan, will it be EPS accretive immediately?
Yes, we think that it's going to be, for this quarter it'll be, because the acquisition that we are doing is going to be effective April 1. So there is going to be an improvement in EPS.
All right, Niranjan, we'll leave it at that. Thanks so much for joining in and sharing your thoughts about the company's future, and all the best with the acquisition. So